Hey, what's up guys? Welcome back to another video. So in today's video, I'll be going over ICT's daily bias concept. Now this concept is one of the most powerful concepts in forex trading. So whenever you want to get into trades, maybe you want to buy or you want to sell, you have to know the direction of the price movement, right? So you have to know if price will go bullish or if price will go bearish in order for you to buy or sell. You do not get into the market and you start buying or you start selling. It doesn't work that way. You have to know the direction of price movement. So this is where ICT's daily bias comes in. So in this video, I'm going to be doing a full breakdown of how this concept works. So I'm going to be doing my possible best to simplify this concept as much as possible. Now, with all that being said, let's get straight into the video. So there are three necessary key factors to knowing your daily bias. So number one, we have the weekly bias. So in order for you to get your daily bias, you first have to find the weekly bias. So I'm going to be explaining this later in the video. So number two, we have liquidity or fair value gap. So you have to find the nearest liquidity or the nearest fair value gap in the market. Now number three, you have to execute trades using smaller time frames. Now the smaller time frames could be 50 minutes, it could be 5 minutes, it could be 1 minute, but it has to be below the 50 minutes time frame. Okay, so why is it necessary for you to get the weekly bias first before getting the daily bias? So basically, the weekly bias gives you long-term perspective, right? So you need long-term perspective above the daily bias if you are going to find a very, very good trade setup. So you just basically need the weekly bias for long-term perspective, right? So let's say you want to get into a trade on a Tuesday on the first week of a month. You have to know the bias of that whole week for you to actually get your daily bias. So it's that simple. So number two, it helps you to avoid trading against trend. So if you are able to get your weekly bias first before getting your daily bias, you will be able to avoid trading against trend because obviously it's going to give you the long-term perspective. You basically have a much higher perspective even above the daily time frame. And then number three is the next time frame above the daily time frame. So let's say you want to get into a trade, right? And you want to take a certain trade setup on a time frame. It's an obvious thing to go to the higher time frame to get a bigger perspective. So obviously the weekly time frame is bigger and greater than the daily time frame. So whenever you want to find your daily bias on the daily time frame, it's much advised to go first to the weekly time frame to get a bigger perspective before going down to the daily time frame. It's very simple. Now on the number two, we have liquidity and voids. Now, first of all, what you have to know is that price loves to take liquidity. So it could either be liquidity run or it could be liquidity grab. So liquidity run is when, price, let's say price is on a bullish momentum, right? So let's say there's a liquidity above the current price level. So price, does tap out the liquidity and keeps going on the bullish momentum. So that's basically liquidity run. And liquidity grab is when, let's say price is going bullish and there's a liquidity below the current price level. So price comes all the way down just to tap out that liquidity before continuing the bullish momentum. So that's basically liquidity gap. So price loves to take liquidity runs and price loves to take liquidity gap. So that is what you should know. The reason price doesn't go on a single direction, the reason price, is going up and down, the reason price is manipulating is basically because of liquidity. Now, on the number two, price is obligated to fill fair value gaps in market structure. So whenever you find voids in the market, whenever you find imbalance in the market, you should anticipate for price, to come down or, to go up just to fill that fair value gap, because price has to fill in those orders. And on the number three, the big banks are responsible for pushing price towards liquidity and voids. So the big banks are not your regular retail traders. The big banks are the Wall Street. They are the big institutional banks like, Goldman Sachs. They are the big hedge funds, that manipulate and control price. So these are the guys, pushing price because they have the money, they have the funds, right? So they have billions of dollars. So they can literally manipulate and influence price to go whatever direction they want. So they're basically the people, pushing price towards liquidities, and they're also those responsible for pushing price into voids. So they're responsible for pushing price all the way just to fill fair value gaps. So it's very simple. Now, lastly, we have trade execution. So it's very necessary to use smaller time frames to find trade setup for better risk reward ratio. Now, I'm not saying you cannot find setups on the hour time frame. It's possible to find setups on the 1 hour time frame or even on the 4 hour time frame. But the thing is, your risk reward ratio is going to be very, very low if you use the higher time frame. So that's why I always recommend using the smaller time frame, like the 15 minutes time frame, the 5 minutes time frame, even the 1 minute time frame, in order to have a bigger risk reward ratio. Now, secondly, always trade in the direction of daily bias. Never, never, never go against trend. You don't have to go against the trend. If your daily bias tells you that price will go bullish for the whole day, you do not have to sell the market for the whole day. If your daily bias says, okay, price is going all the way down for the whole day, you don't have to take a buy. You don't enter the market unless you see a trade setup in the direction of your daily bias. Now, the third fact is setups don't occur daily, so you don't have to trade every single day. Now, most people have in their mindset like, oh, every single day I have to take, at least 2 to 3 setups in order to make a profit. No, there's a high probability you won't find trade setup every single day. Maybe on Monday you could see like 2 trade setups. On Tuesday you could see just a single trade setup. And on Wednesday, you might not even see any single trade setup. Now, it's okay not to see a trade setup. You don't have to force yourself, to get into the market if you don't see a trade setup. Now, lastly, don't try to catch every move. This is very important. Opportunities will always come, right? You don't have to have the fear in mind that, okay, what if price continues to go bullish and price doesn't come all the way down? There will always be opportunities. Don't try to catch every single move. Don't try to go, to the 5 minutes, to the 1 hour, to the 50 minutes, looking for every single move. Don't try to calculate every single move that the price is making. You just have to patiently wait for a setup. Once you have your buyers, wait for a setup. If you don't see a setup, you patiently wait for the whole day. Like I said, you don't have to trade every single day. Having that mindset will really, really, really help you trade better. So it's that simple. Don't try to catch every single move. Opportunities will always come. Okay, so now we're going to be going on to the charts to check out some real life examples. Okay, so this is GBPUSD and we're currently on the 1 hour time frame. As you can see, this is the Monday open, right? And this is the Monday close. So basically all this right here is a daily candle. So now let's say we want to analyze this chart. So how are we going to analyze? So first we have to go to the higher time frame. Now we could go onto the daily time frame, but like I said, if you want to analyze your daily bias, you have to first analyze the weekly bias. So we're going to go on to the weekly time frame. Okay, so on the weekly time frame, you can see that price from this point right here has been going all the way bullish. Now, if we take a closer look right here, so you can see this price just recently hit this level right here. So this is a whole high. So price just recently hit this high right here. So let's say price, let's assume that we just analyze our chart over the weekend and price hasn't gone to this high. So we know price for sure we keep going all the way bullish. So this basically is going to be our TP. So this high basically is going to be our TP. Now let's go down to the daily time frame. Okay, so on the daily time frame, you can see that price went all the way bullish, but wasn't strong enough to break this hold high. So price retraced down last week and price tried going all the way up, but price couldn't, take that high. So the mindset we just have to have for this week is that price will go all the way bullish to simply take this high. So on the weekly time frame, our bias is bullish. On the daily time frame, our bias is bullish. So basically, every single trade setup you're going to take is going to be a bullish trade setup. We're not going to try to sell in the market. We are only just going to take buys, right? So let's go down to the lower time frame. Let's go down to the 1 hour time frame. Okay, so on the 1 hour time frame, you can see all this right here happened last week, right? All this happened last week. And this, you can see from this point right here to this high, all this momentum happened just within Monday. So if you're going to get into this trade, how would you have gone into this trade? So like I said, all you have to do is you just look for a bullish setup. So basically we have our bias. So we need to get our range and we have to get the entry. So you can use multiple structures as your range, but this is a range high from just today. So this little range right here. So this happened on Friday to like Sunday. And as you can see, price broke structure right here. So let's take a closer look. So you can see this right here is a break of structure, right? So price broke structure, right? And price will go bullish. So this basically is going to be our order block. So this right here is going to be our order block on the 1 hour. Now, some might say, oh, you shouldn't use a bullish candle, to enter a bullish setup. You only should use a bearish candle to enter a bearish setup. Now, for those of you who might think about that, you can just simply go to the lower time frame if you can find, a candle that is bearish. And this is a bearish candle. So you can just draw this up all the way and just take this all the way down. So this is going to be your entry, right? So let's place our position. So this is going to be our entry. This right here will be our entry. And this will be the stop loss. Okay, so now to get our TP, we're going to use our TP from the daily time frame, from the higher time frame. Now we're going to draw this all the way up onto this point. And you can see this is a beautiful 6.8 risk to reward ratio. So even though I said at the beginning of the video that whenever you want to get into trade, you should only take trade on a smaller time frame, you can actually see that this on the 45 minutes is almost 1:7 risk to reward ratio. Now let's say you didn't get into this trade, because like I said, I told you don't enter using time frames above the 50-minute time frame, because you're not going to find most risk to reward ratio, right? So now let's try to see if you can find any setup on the smaller time frame. Now obviously you can see this candle right here. So this candle, this black candle right here, is a 45 minutes candle. So you can simply wait for price, to come all the way down and tap into this candle before you start to look for a setup on the smaller time frame. Now let's go down to the 5 minutes time frame. Okay, so now on the 5 minutes time frame, immediately price came all the way down, tap into this other block, price started going all the way bullish. So all you just have to do is to look for a break in market structure, and we have a perfect break in market structure right here. So this is on the 5 minutes time frame, by the way. So this is a break in market structure. Now, which other block was responsible for breaking this high? This is the other block responsible for breaking the high. This is the other block right here. Okay. Now, if I was going to get into a trade, it will be a buy. So this is going to be my entry, right? This right here is going to be my entry, and this will be, okay, this will be our stop loss, and our TP is going to be all the way up, right? So we're going to use RTP from the higher time frame. Now this is going to be RTP, and you can see this is a 1:34 risk to reward ratio. Now this is crazy. This is massive. Just using the 50-minute time frame, just using the daily bias, you can actually find up to 1:34 risk to reward ratio just within a day. This is very crazy. This is massive. Okay, so we're going to move on to our next example. This is the USDJPY. We're currently on the 1 hour time frame, and this is the Monday open for this week, and this is the Monday close. As you can see, there was a bearish impulse move all the way downward. Now, if you're going to get into this trade, you first have to find your bias, right? So basically, we have to go onto the higher time frame. Now, let's go onto the 1 time frame to have a bigger perspective. Okay, so on the weekly time frame, you can see the price from this point right here has been going bearish. So any trade you're going to enter is going to be with a bearish perspective, right? So you're not going to be looking for a bullish entry or whatever. All you're going to have in your mind is to sell, period. Now let's go down to the daily time frame. Okay, so on the daily time frame, you can see the price has been going all the way bearish, and this candle right here, this rejection candle happened on Tuesday of last week. This happened on Wednesday. So price was supposed to tap this low, but for some reason price didn't tap the low and went all the way up just to clear out every liquidity on the upside. Now price is now on a bullish reversal. So throughout last week, price was actually bullish for USDJPY, but that in any way doesn't mean that you should look for a trade setup in a bullish perspective. All you just have to do is to sell. You don't look for a buy. You just have to look for a sell. Now let's go down to the 1 hour time frame. Okay, so on the 1 hour time frame, I already have my daily bias, right? My daily bias is bearish. Now as you can see, price ended up going all the way bearish, right? But if I were going to get into this trade, how would I have got into this trade? So first of all, let's first highlight RTP. Like you can see, this is basically a liquidity right here. So this equal lows is basically a liquidity. Okay, so if I was going to get into this trade, this would be my TP. Just because I know price is going all the way down doesn't mean, I can set my TP all the way down here. Remember, we are trying to get a daily bias. So we're just trying to take a trade just for one day. We're not taking a trade long term. It's just only for a day. So it's basically short term. Okay, so all this happened throughout last week. So this bullish rally all the way up happened throughout last week, right? And this consolidation happened overnight. It happened during Sunday. So as you can see, price came all the way down into the Monday opening and went all the way up just to tap out this liquidity right here. So this, you can see this are equal highs. So price went all the way up, tap out this liquidity and start to go all the way down, right? So this basically is liquidity. Before price can start to go all the way down, price has to tap these two equal highs. Now, if I turn on this session indicator, you can see this yellow color right here is Asia. This green color right here is London. This white color right here is Sydney. So this is Sydney and this is Asia. So before price can start to go all the way down, the London session will try to take out Sydney and Asia. So basically, these are liquidity. Firstly, because these are equal highs. And secondly, because this high is Asia and this high is Sydney. Okay, so even if you price tap these two equal highs, all you just have to do is to go down to the lower time frame and start to look for a break in market structure. Now let's go down to the 5 minute time frame. Okay, so on the 5 minute time frame, immediately price taps out Asia's high and Sydney's high. You can see price start to go all the way down, and this right here is a perfect entry. You can see this is a low, and as you can see, this candle right here was responsible for breaking that low. This candle right here. So you can see price went all the way down, broke this candle right here. So this basically was a breaking market structure, and price retraced back into our entry. So if you're going to enter this trade, this is going to be a sell. Now this is going to be our entry, right? And this basically will be the stop loss. Okay, so our TP is going to be the equal lows on the 1 hour time frame. So those equal lows we highlighted on the 1 hour time frame will be RTP. Now this is going to be RTP just right here. And you can see this is a perfect 1 to 14 risk to reward ratio. So it's basically simple. It's that simple. So just in a single day, I can make up to 1 to 14 risk to reward ratio just understanding daily bias. Now, if you notice in USDJPY, I use a 5 minute time frame to find a trade setup. Likewise, in our previous example, on the pounds USD, I also use the 5 minute time frame to find a trade setup. Now, this is why I say it's very, very, very useful to use the lower time frame compared to the higher time frame, because using the lower time frame, you're going to find setups with higher risk reward ratio compared to the higher time frame. So it's basically simple. Now, I hope you find this video really helpful. If you have any questions at all, you can ask in the comment. And if you're here to subscribe to the channel, please be sure to subscribe. Thanks for watching this video and see you guys in the next one.